All right, what's up, guys? Guys and gals, good morning. It is, what the heck, what is today? February 2nd. It is Groundhog Day. So we'll see what that fuzzy little bastard has got in store for us later as far as all that goes. But let me just make sure. All right, we're good to go here. We'll get jumping in, y'all. So the talk of the town this morning, big talk on campus. Google announced its earnings last night. Pretty good quarter. So pretty good earnings numbers, pretty good revenue. The big story here is the stock split, a 20-1 stock split, which is a little bit funky to be honest. So let me see, 20-1. Oh, Google here is trading around. Well, we're going to open up at basically the pretty much a brand new all-time high. We're going to open up around 30-20. So 30-20 divided by 20. This morning it's a $3,000 stock. A few months from now, you're going to get your 20-1 stock split. So, in terms of trading Google here, I don't really have any trade ideas. This is a massive gap up. The options are going to go crazy. If you got a lottery ticket last night, kudos to you. Otherwise, just kind of going to use Google as a proxy here for the rest of the market. And it's going to be an interesting one because if you look at the structure of the indexes, as of late, things really have shifted. Everything, structure has shifted, momentum has shifted, trend has shifted. You get this big oversold bounce over the last few days, and Google's definitely helping the QQQ here. So it's going to be interesting. My focus over the last couple of weeks here has been pretty much to wait for a bounce just like this, with the idea trying to short that bounce, looking for the market to run into resistance and then roll back over and take out those lows. It's still the game plan I'm looking to work, but I am going to be just a little bit patient here. In terms of structure, because you don't want to marry any ideas. In terms of structure, if the S&P and the QQQ, if they were to close this week above the weekly moving averages, which is your blue and your white line right here. The blue line is the weekly 8, the white line is the weekly 21. Come Friday, if these indexes are closing back above the weekly moving averages, I might be a little bit patient here on the short side of things. I want to get short right now because of the shift of structure. Structure can easily shift to pretty ugly and then very quickly start to be solid again. So I want to be patient here, but in terms of trying to short, the whole name of the game is going to be risk versus reward. So we can price out a few different trades this morning, but the point being, be a little bit patient here. You don't want to have any biases. You don't want to marry your ideas. And I think a lot of the market here is going to wait for Amazon earnings on Thursday. Now, just my opinion here, I could be dead wrong. Just my opinion, though, I wouldn't come jumping into Amazon and looking to buy, lottery ticket, deep out the money calls with the expectation that Amazon's going to announce a stock split. Now, Google just did, so good for Google and good for those that were long Google. I would be a little bit careful. Be a little bit careful with the assumption that old Amazon here is going to do very much the same thing. So in terms of trying to short this market, I am going to be patient here, and getting short is just a matter of structure. So as we go cruising into Friday, if the NQ is up here around 15.4, back above the weekly moving averages of the S&P. Your S&P as of this morning, you are back above the weekly moving averages. Back above the weekly 21, back above the weekly 8. And for the small caps, we'll take a look at those. Now, this would be the first spot I want to short. Yeah, definitely would be the first spot I want to short here. But that's a game plan, because I know for the last couple of weeks we have been talking about trying to get this big oversold bounce, which we certainly have here. But we were discussing the idea of trying to work some low risk, high reward shorts. It's still an idea I'm going to pursue. I'm just not going to rush into it here this morning. And I think ideally I'd like to see how Amazon does with earnings, and then we shall take it from there. But a good example of a short I'm trying to work, because we're in this transition period right now. The uptrend, the bullish environment, it definitely took a pretty good hit here. But I also wouldn't say we're in an all-out bear market. Wouldn't call this an all-out downtrend. So it's kind of one of these transition periods. And I think during a transition period, you really want to focus on risk versus reward. So for the IWM, and what I like about shorting this is you got no support. You got no level of support here. So you spend a good year or so just trapped inside this big consolidation. Your 208-ish level, we'll call it 208. Your 208 level for like a year is pretty good support. You get a pretty good flush on the break of support. I think if we can bounce back into that level and once again get rejected, or in other words, if previous support turns into resistance, then I would look to short the small caps here. You get a weekly squeeze firing short. There's no stacked DMAs. There's a bunch of red 10x bars, but I got no support here, pretty much until 170-ish. So I think the small crappers have got plenty of downside. But here's how I'd structure the trade. In terms of a potential exit, kind of like we just discussed with the S&P and the QQQ, I don't know if I want to be short, and I definitely don't want to rush into a short if we're trading back above the weekly moving averages. So the weekly 21 EMA here for the small caps is right around 215, 216. So on any short position here, that's basically going to be the line in the sand, meaning if we get a big close back above the weekly 21, probably going to be inclined to close the trade and move on to something better. So 215, 216 is kind of the risk here. And in terms of a target to the downside, we need a little bit more data. In terms of a target to the downside, well, initial target would be, we'll call it 185, pretty much underneath your recent lows, but I would really look for about 170. So we exit a trade here on any close above 215, 216, and we're going to try to catch a flush down to 185 to 170. Now, I'm not taking this trade just yet, and like I mentioned, I would like to take the trade somewhere up here around 210 plus. But in terms of working a trade with those two targets there, here is what I am pricing out at the moment. And I'll show you guys this on one contract. So what I'm looking for here is a March 18th expiration, 185, 190 call credit spread. So not quite the traditional credit spread where you're trying to sell the out the money options. I want to try to sell the in the money options. Okay, so the whole idea here is if we close back above the weekly 21, I'm going to can the trade and I'm going to move on to something else. But if the market does continue lower, you should basically wipe out that recent low, and I think you're heading down towards 170. So that's why I'm looking for an in-the-money call credit spread. If I think a big move is lining up, I want to make sure I can really maximize it. So really put yourself in a position here with that risk-reward drastically working in your favor. So 185 short call, buy the 190 as protection. And here's what that would look like on the options chain. Right? March 18th, we're going to sell that stinker right there, and then you're going to buy the 190. Now, what I would like to do, it's going for about $3.90, just about $4 a credit. I would like to get it for about $4.50. And I think if we get a decent bounce here into about 210 and change, we should be able to pick this up for $4.50. But check out the risk reward. You get $4.50 a credit. You're risking $500 to make about $4,500. Now, keep in mind, that's best case scenario, worst case scenario. I'm not going to sit here and take the max loss. There's also a pretty slim chance I'm going to sit here all the way until expiration and try to collect the max profit. So the cost of entry is pretty solid. More importantly, we're going to close the trade around 215, 216, and we got two targets here of initially 185 and then 170. So what really matters most here is the risk reward between those two targets. So let's just say later this week, indexes keep bouncing, IWM's up there, previous resistance, previous support rather. Let's just say we can get that spread for even $4.20. My lucky number. So let's look at the risk reward here. Let's just say we can get the spread for $4.20 this week. And let's just take it this, next Friday. So if we could get filled this week, let's check out the risk reward here into next Friday. And we're looking at one contract. So up here around 215, 216 on one contract. We're down about $50 per contract. On a move down into about 185, we're up about $180 per contract at 180. You're up about 230, and then of course all the way down at 170, you're up like $300. The point being, the risk is pretty damn small in comparison to the potential return. But the key is we got to wait until we get a better bounce here so we can try to sell the in-the-money spread and collect as much credit as possible. And you could do the debit spread, right? There's a few different ways you could go about it. What I like about the credit spread is just kind of straightforward. Sell the 185 call, and then you just kind of move on with life. If we're down here at 185, we got a great trade. If we're down there at 160, it's a total grand slam. You just have a little bit more wiggle room as opposed to a debit spread. You could work either here, but that's the point I'm trying to make. While we're in this potential transition, it's like, well, all right, maybe we're going into a bear market, or maybe, Google says hold my beer and kind of saves everything. While we're still trying to figure out what the path of least resistance is going to be, really structure trades, credit spread, debit spread, whatever the case may be. Really try to flip that risk reward in your favor. And mind you, we got a class coming up this Saturday, so if all of this kind of seems confusing or doesn't quite make sense, definitely check that out. But that's what I'm waiting for here on the IWM. I want to sell that in-the-money call credit spread, ideally for like $420, $450 a credit. I would toss the trade aside. I mean, with this kind of risk reward, you could give it all the way up into like $220. But I'd risk it on a move up to the weekly 21, looking for a pretty big flush. So I'm going to be patient with that idea. But I think the major level to watch here, if you just check out the recent consolidation, is going to be that 210-ish level. Support, it's support, it's support. You finally break support. So now the big question is, does previous support turn into resistance? I'd like to think on a bounce into 210, it's another $7 to the upside. We can get spreads just like this for the credit we're looking for. So that's what I'm thinking as far as short in the market. IWM would be the first one I'd like to short. Then you kind of move on from there and look at the Qs, the S&P. But in terms of playing the upside right now, there's actually a lot to discuss here. So if you jump sector to sector, it's pretty obvious that energy, this is where the big money's going right now. Just structurally and momentum-wise, if you look at tech, don't confuse a good oversold bounce for a bullish chart. It's not a bullish chart. It looks pretty crappy. Red 10x bars, no stacked DMAs. You just got so oversold. You're going to get a pretty ridiculous rally. But don't confuse the two. That's not relative strength. That's not leadership. That's not bullish trend, structure, or momentum. It's just an oversold bounce, at least for now. You look at the industrials. It's very much the same, so don't confuse that little bounce. You look at financials. So pretty much everything outside of energy has pretty beat up structure, but you are getting some really solid oversold bounces. So there's definitely some opportunity there. I'm much more a fan of taking trades in the path of least resistance. You look at energy here, and I think very clearly, stacked DMAs, green 10x bars, path of least resistance for energy is very much to the upside. So while I am waiting for a few shorts, mainly on the IWM, really going to try to dial in here to the energy sector. So if you look at a few setups here, in the mastery yesterday, we took DVN, a little bit of Devon energy. Keep in mind, they all, generally speaking, they all kind of look the same right now. So pick your spots wisely. You take your pick of the litter here. But DVN's got a good looking structure. Weekly, 3-day, daily, 4-hour, 2-hour, 60-minute, 15-minute squeezes. All good looking stuff there. So I'm pretty much waiting for that domino effect. Can the 30-minute squeeze fire long? Can that then go on ahead and trigger the 1 hour, which then should trigger the 2 hour, which could trigger the 4 hour, which at that point, your daily squeeze is firing to the upside. So DVN is really solid. Let's see, you got a few more here. Here's FANG, FANG. It's kind of a mirror image. So really similar structure across the board here, but that's a good pick. Brandy from the options room, she called this one out yesterday in CNP. Really good looking daily squeeze. Let's see, XOP. I think Sam from the options room's got some of that oil and gas ETF. So really similar structures, right? There's DUK, there is CNQ. So if you're doing some homework today, run a couple of scans. Here's what you could also do. Go to ETFDB. Two spots to look at. One is going to be XLE, which is your energy sector ETF. So search for XLE and then look in the holdings. See if you like any of the setups here. Right? ExxonMobil, Chevron, EOG, a whole bunch of them. See if anything offers a good entry. And you could also take a look inside of XOP, oil and gas. So search for XOP, hit holdings, and see what you got in here. A little bit of PBF, a little bit of APA, some Exxon. There's our little Devon. There's your FANG. There's CLR. So I think just in terms of structure, we as traders, we want to pretend we're like little magnets, right? And just in terms of the big money right now, maybe they start to pile into the XLKs and the financials, etc. This is just an oversold bounce for now. Right? In terms of good structure, good trend, good momentum, clear as day, you got to end energy here. So run a few scans inside of energy stocks. The major point here is you got to pick your spot wisely. Would I suggest you come into XLE at this point at 3/8 AR on a daily chart and load the boat long? Probably not, but that's why you got to pay attention here. Because ideally what you're going to look for is kind of something like you had last week. Little 2 to 3 to 4 day break in the action, but that little consolidation just starts spitting out all kinds of squeezes at you. So it's your leadership, it's your strength, you got momentum here, get all the pretty colors here, but you don't want to jump in blindly. Wait for those lower time frame squeezes. I think as far as energy goes, you do have a 15-minute. And for those of you that like to trade, shorter term, intraday style, check out these energy names today and check out all the 15-minute squeezes. There's a lot of them. So XLE itself, good looking 15-minute squeeze. There's that DVN, which we picked up yesterday. Good looking 15-minute. I believe that FANG. Yeah, FANG has a 15-minute. You're just trying to jump into leadership with a little bit of edge. And a lot of times for me, and I think for a lot of us, the edge typically comes from a squeeze on some time frame. So if you don't quite have that big daily squeeze, dial it down to a 4 hour, dial it down to a 15-minute chart if you have to. Just find your leadership and then find a good entry. And that, my friends, is pretty much what I got for you here. Google shall be interesting today, not because I'm looking to trade Google itself, just more so as a proxy for the rest of the market. I would be a little bit careful here. If you want to play Google long today, I actually don't think it's a terrible idea. I would just be patient as far as the option pricing goes. This is a $27.50. We're talking a $300 move, just about. $200, $300 move. These calls this morning, they're going to be super, super pricey. So if you do want to play Google long, watch it closely at the open. I think you wait for a little bit of shake and bake, wait for a dip, then maybe you try to jump in. I got no plans here for Google. More so, all right, I've been looking to short the Qs. Does Google and now Amazon, do they kind of come in here and save the whole structure? Like I mentioned, if we're coming into Friday and we're back above the weekly 8 and the weekly 21, I'm going to be a little bit patient to short. But if you do try to short this market while we're in this transition, risk versus reward. The out the money calls, things of that nature, I don't think it's your best option right now. You could do a out the money debit spread. You can do the in the money call credit spread. Ideally, you're trying to risk one to make 4 or 5. So however you got to structure a trade to accomplish those numbers, to me, that's what makes the most sense right now. So waiting on IWM, if we can get up to about 208 to 210, I'm probably going to start jumping into that short position. And I'm only at that point going to risk a move up into like 215, 216. So very little risk. And what I feel potentially is some pretty big reward on a flush down to 170. So patiently waiting for that. But in the meantime, energy is where all the action is. So I'm looking for things like DVN. Trading near the 21, you got your stacked DMAs, you got your green 10x bars, and the more squeezes, the merrier. That's your leadership. You're just looking for a good entry. So we can go through these here one more time, but DVN is solid. Let's see, you got DUK, pretty good looking daily squeeze. There's CNQ. There's FANG, there's XOP. They're all kind of a mirror image. So I think you take what everyone offers the best entry, really. And XLE itself, to me, that's not the best entry at the moment. But that's what I got for you guys this morning. With patience, seeing how things set up here for potential short, mainly on the small caps, and mainly because there's nothing to save this until we're down here at like 170. So I think you got a lot of room to fall here. That's a major focus on the short side as far as the Qs go. Google kind of says, hold my beer last night, so we'll see what Amazon says. But again, I'd be a little bit careful about the assumption that just because Google announces a stock split, that Amazon's going to turn around and kind of hop on that bandwagon. I don't think likely. So be a little bit careful trying to work those kinds of ideas. But then in the meantime, just basics. Structure, trend, momentum. So Coca-Cola is not the sexiest or the most exciting stock, but this has great structure, great trend, and great momentum. So that's on the watch list. Another one here is UNP. Not a bad daily squeeze. Even better here is a good-looking 3-day. Got your 10x bars, all the good stuff. And you got a pretty strong weekly chart. So UMP is starting to shape up. Another name here, print and buy signals, is CVS. So it's not an exciting stock, so to say, but you got weekly and daily stacked DMAs, weekly and daily green 10x bars, and you're trading here at the buy zone with a positive histogram. So CVS, I think, is rock solid. If you take a look here at John Deere, old Johnny boy, looking pretty good as well. Weekly squeeze, 3-day squeeze, daily squeeze, 4-hour, 2-hour. I mean, you guys can see them over here. You got squeezes all over the place. So that is a good looking setup. Let's see, CME. CME is pretty solid. And here's what I'll do, guys. We'll do some Q&A right now. I'll share this watch list here in the chat. That way, if you want to take a deeper dive into anything, y'all can go on ahead and do that. So let me copy this up, and then we'll do some Q&A here before the open. But just keep it simple, right? Focus on the basics. If you're trying to get long in this market, you could try to catch the oversold bounce in the junk. And the junk to me is stuff like Piton, stuff like Zoom, stuff like Roku. Quite frankly, at this point, it's stuff like Microsoft. Or you can try to get long in something where the path of least resistance is to the upside. To me right now, that kind of strikes me as anything in energy. And then some of the setups you got here, John Deere, IBM. There's even Dr. Pepper. Dr. Pepper looking pretty sharp. So I'll share this watch just here in the chat, and then we'll do some Q&A before we jump into today's session. How do I share this? All right, put that in the chat. Yeah, my man G, I can definitely share the ETF DB. Let me grab that for you right now. And this is a good resource. I got this from Raghi over here at Simpler. She uses this a lot, ETFDB. See, come into the search bar, and say you're trying to get a better sense of what are the inner workings of the semiconductor sector. What are the top 10 holdings in the semiconductor sector? Type in SMH. And just come over here to holdings, click on that bad boy, and there's your top holdings sorted by weighting. So interestingly enough, TSM is the most heavily weighted stock in the semiconductors. And you got NVIDIA, Broadcom, Qualcomm. Where's little AMD? Little AMD, all the way down here at 4%. A good resource, though. Really good resource there. I got you, brother. Good morning, Emily. How are you? Why do some charts, KMI, Kinder, why do some charts and candles look so uniform and designed in 1 minute? Do I have a 1 minute chart? Let's take a look. I think I get what you're referring to, though. Let me see. Let's change this to a 1 minute. I think I know what you're referring to, Emily. Let's see. My indicators are messing this up. Hold on. Let's do that, and then let's do this. Yep. Okay. I see exactly what you're talking about. Emily, I don't know the exact reason, and I'm sure there's an exact reason. Just sometimes at these, call it lower price stocks, the lower time frames do look a little bit funky. I'm sure there's a better explanation as to why. That's what I tend to notice, though. Your, $30 to $20 to $15 stocks, they're kind of hard to chart here on the 1 minute time frame. It's just very visually. Hey, good morning, Mayor. How are you? What do we got here? You bought a 3,000 call for next Friday on Amazon. It was up 3,000 end of day yesterday. Yeah, so earnings is what, tomorrow? Amazon should be good here. And this is just kind of based on the Qs and Google. 3,100 into earnings would not surprise me. Would not surprise me. I think we're going to open up around, let's see, 30.80. Yeah, Amazon was kind of due for a bounce here regardless. You're down here at minus 4 or 5 ATR. Then your Qs, they put in the bounce. Now you add a little bit more fuel to the fire with Google going crazy. It all kind of comes together here to give Amazon, I think, a pretty good nudge into earnings. I'd be looking for about 3,100, which should make for a pretty good trade for you there, Mayor. Nicely done. Nicely done. All right, guys, try to go through all these here real quick. Hey, good morning, Matt. So in terms of the S&P, this is where you got to have rules in place, right? Because I've been waiting the short. And the longer you sit around and wait to do something, the easier it is to marry that idea. All biases aside, if your S&P closes Friday above the moving averages here, I'm not saying I'm going to look to go long. I don't think I'm going to be in a rush to short it. A big part of me wanting to short this market is just simply, hey, we're trending under the moving averages. We're under our daily 8, our daily 21, and we're under our weekly 8 and our weekly 21. If all that changes by Friday, again, I'm not sure I'm going to jump into a long position just yet. I'd rather get long, energy, spots that have better structure. But in terms of if we close Friday above both the daily and the weekly moving averages, am I going to rush into a short position? Not quite. So that's going to be really important this year because, again, this kind of transition phase, well, are we bearish? Are we bullish? Is the uptrend dead? What's the scoop here? Well, we're trying to get a better sense of what the general direction is going to be. Think we want to be willing to kind of turn and change opinion on the flip of a dime. So I don't really see a long position here just yet, but I wouldn't be the first one to try to short it. Definitely want to be a little bit patient with that. Yeah, Wilkin, DVN is looking good. They're all pretty similar here. DVN looks a lot like Fang. Fang looks a lot like XOP. And they all kind of look like the rest of the bunch, which is a good thing. It just kind of shows, hey, the whole group here should be getting ready to push. You just got to jump onto your pony of choice. Hey, good morning, Phil. RTX, yes, that is a good setup, I believe. Yeah, that was on the scan results this morning. So good daily squeeze, stacked EMAs, got green 10x bars. Phil, check out over here, the left-hand corner. Weekly, 3-day. You have a squeeze basically from a weekly chart down to a 5-minute. So not a guarantee it's going to trade higher. That's just kind of a heads up. It's fixing to do something here. Definitely fixing to do something. What I kind of like about this one is if you can break through that 92, 92.50 with all of these squeezes right now, you've got nothing stopping you. There's no ceiling on this above 92.50. So if we can break through that brick wall, firing a 5-minute, a 15-minute, 30-minute, 60-minute, so on and so on, it could be a pretty big push. So RTX, I think, is very solid. And my friend Jason, good morning, Jason. Yeah, I think you got a few good ones here. ABBV was also top of the scan result this morning, and for good reason. Buy signals, stacked DMAs. You got a good slew of squeezes here, and the histogram starts to shift, which is really attractive. Kind of flirts with the idea of firing short. Bulls taking control. It's a great setup. Only thing here, Jason, to keep in mind, earnings will be. Oh, okay. Earnings were this morning. So how are we doing here? Right. Am I crazy? Earnings on 202 before market open. Kind of looks like we're going to open flat here. So I'll have to take a look at how earnings went. But just setup for setup, I like it. I think it's a beauty right here. And then Jason, I think you got another beauty here in Procter and Gamble. It's a little bit sloppy, but notice how they don't let it go. Histogram shifts, you're breaking moving averages, you're at support. If the bulls wanted to let this roll over and die, I think they could have easily done it back here. So the fact that they just continue to nibble at it, support continues to hold up, and the histogram starts to shift, it holds structure pretty good here. Holds structure really good. Still getting early buy signals, and I think you got a 4-hour squeeze, which is a little bit sloppy, but good structure here. Let's check out XLP. Jason, another thing here working in Procter's favor, potentially, is going to be XLP, kind of getting back on its own 2 feet. So for the last, let's call it a week and a half, 2 weeks, XLP is getting a little bit sketchy here. As XLP gets sketchy, it just kind of makes it hard for Procter to explode to the upside. But now as the group seemingly tries to take back the moving averages, momentum starts to shift, kind of gets back on its own 2 feet here, that could be the green light that Procter & Gamble needs to finally make that nice push. So good structure. Now we got to see if we can get some wind at its back. A little bit of windage here. Good morning. London Perignon. What do I think of Qualcomm? Relative to a lot of names in the semiconductors right now, this is it's probably your best. Let me see real quick. Yeah, Nvidia got beat up. AMD's in a gap up nicely this morning, so earnings is helping out AMD. And Micron got beat up here. Broadcom's okay. Just the group as a general statement kind of looks like everything right now. Big nasty flush, broken structure, and you're trying to put in an oversold bounce. So I'm not too hot on the group as a general statement. I do like your focus here on Qualcomm. It held up like significantly better than the rest of the group. And while it did flush a little bit, it's right back above the 21. Is it my favorite chart in the market? Definitely not. But in terms of the semiconductors, this would be my favorite. Relative strength wise, I think it's probably your top pick. I'm so sick of earnings season though. Earnings are tonight. So that kind of makes it tough to come in here and structure a swing trade or something. But I would come take a look at this again tomorrow after earnings. If it's looking like our market's going to have a week, 2 weeks, maybe 3 weeks of generally just trading higher, I would be interested in some Qualcomm. Good looking setup there. Good looking setup there. I like your question. I like your question here. Definitely practice patience. Practice patience. Granted, you leave a few dollars on the table, theoretically, but yeah, I kind of wait for a move back under the 21. Because it's a huge part of my checks, right? The main reason I'm saying, okay, I might want to short this market, there's a few different criteria, but one of the biggest ones is, well, we're under the moving averages, weekly and daily. Generally speaking, I don't like shorting when we're above the moving averages, especially on the weekly chart. That tends to just be a buyable pullback. Now you start to break those moving averages, now you might have something to the downside. But come Friday, if we're back above the daily 8 and 21, back above the weekly 8 and 21, I got to be real with myself. I got to look at my checklist here and say, hey, as far as a good short, there's some rules being broken here. Shouldn't be back above the moving averages. So I think especially with Amazon earnings coming up and all the hype there, probably looking to see how this all unfolds into tomorrow and then take it from there. But yeah, Christian, I think if you could wait for a move back under the 21, not a terrible idea. I think it also depends where's your stop. Where's your exit? Where's your line in the sand? Now, so from another perspective, you don't have to wait. We can look at the small caps as an example because we discussed that earlier. But if my exit is going to be a close above the weekly 21, well, in terms of working a good risk reward, I actually want to aim to take my entry as close to that weekly 21 as possible. So for the QQQ here, while there's definitely some edge in waiting for it to break back under the 21, in terms of working a good risk reward, we're in the ballpark, right? We're basically back at the weekly 21. You get where I'm coming from, though. In terms of the probability of the trade working in your favor, there's definitely some edge to waiting for things to break down again. In terms of, how can we lock in the best risk reward possible, you figure out your exit, and then you try to work an entry as close to the exit as possible. But it shall not be dull. So trying to be as patient as possible here. Let's see. Google's going to open up to around 3,000, which is pretty much right near your previous high. So here's what I think is going to happen. We're going to open up just shy of the all-time high. I think you might get a little dip here this morning because just put yourself in the position of somebody who bought lottery calls on Google yesterday. What are you probably looking to do this morning on a massive gap up? Probably looking to take profits, right? At least that's a thought that would be going through my head. I'm catching a grand slam here. Let me take my profits. So I think you might get a little bit of profit taking at the open. But then for principle's sake, I think Google comes in here and puts in a brand new all-time high. Shall be interesting. But, as far as putting on shorts here or really doing anything QQQ related, let's see how Amazon earnings goes. Now, if Amazon, for whatever reason, if they actually pull a stock split out of their hat, then I don't think I'll be shorting the Qs at all. Amazon does a stock split, I think the market gets pretty nutty to the upside, especially your big tech names. I wouldn't bank on that, but all of this to say, going to be patient here. Before I'd short the Qs, I'd rather short the small caps. And in the interim, focus on your good structure. I think we've seen a lot of it here this morning. The energy names, names like ABBV, names like Procter and Gamble. There's good structure here. We all have our favorites, right? I love to trade NVIDIA, but that's just kind of crap structure. You're under the moving averages, no stacked DMAs. CVS, on the other hand, that's a great looking setup with buy signals, all the pretty colors. But that's what I got for y'all this morning. Market's going to open up here in about 3 minutes, so I shall cut y'all loose, go heat up the coffee, and then get ready for battle here. Yeah, but last week was pretty interesting. We had a big blizzard here in Massachusetts, so power was down, kind of having all kinds of headaches. But we're back in business now, so it'll be good for us to kind of get back into a routine, doing the Monday and the Wednesday morning pre-market prep. And then, as always, Chandler takes y'all into the weekend on Fridays. So definitely looking forward to getting back into the groove of things here. And then for those of you that signed up for Saturday's class, super, super excited for that. So I'm looking forward to seeing y'all there. And for the rest of you, be safe today. I hope you found some of this helpful, and I shall talk to you all soon.